What's up, guys? I'm Kay Scholl. Welcome to another financial awareness video. How much life insurance do I need? Or rather, how much life insurance do you need? We're going to help you answer that right now. There are two schools of thought. One method that is more generic and another one that's a little bit more personalized. You should know, though, the amount of life insurance that you need or want. It's kind of like me asking you, what's your favorite color? It's completely up to you, and don't feel ashamed about that. Some people get the amount of life insurance they need, and other people get the amount of life insurance they want. Let me give you an example. When my wife and I first got our life insurance coverage, we only bought what we needed. Then, as our life evolved and we had our second child, my wife took a little 1-week vacation to go see her best friend in Denver. I was blessed to be a single dad for an entire week, and that was very eye-opening to manage daycare, diapers, and a full-time career. So within a month of her getting back in town, we both increased our coverage amounts because if something happened and we lost my wife, heaven forbid that doesn't happen, but if it did, yeah, I'm not going to go to work full-time for a while. And I don't want my wife to have to either. So we went from what we needed and then we got more coverage for what we wanted. So just remember, getting life insurance is smart. How much life insurance you get is completely up to you and your budget, and it's a little different for everyone. Okay, the more generic method, 10 times your gross income. That's easy, done. Take your gross income, multiply it times 10, there you go. That's how much life insurance you should get. The more personalized method sounds a little bit like this. Follow me on this example. Get ready. If something happened to you last week and you didn't make it home, would you like your spouse to raise your kids in a completely paid off home? Yeah? Okay. We'll start there. That's $250,000. Also, in addition to that, what other debt do you have? Let's just say, for this example, that you have $20,000 in car loans. We're going to wipe those out too. Maybe you have $8,000 in credit card debt. Those are done. Now, student loans. This is a big question, big topic. If your student loans are federal and they're only in your name, they're only in your spouse's name, then the remaining spouse will not have to pay those off and they will be forgiven at death. However, if you refinanced maybe and put the new refinanced student loans in both of your names, you will still be liable for that. Whether it's your student loans or your spouse's student loans, let's just say $40,000 in this example. Also, final expenses. Funerals aren't free, and paying an attorney to settle your estate, that's not free either. So let's just add all this up real quick. We've got around $20,000 of car loans, $8,000 of credit card debt, $40,000 of student loans, and another $10,000 of final expenses, funeral-related stuff. That adds up to $78,000. $250,000 plus $78,000. Now we're at $328,000 in our running total. Next topic, kids. Got to talk about kids. Do you want your kids to go to a private college, a public state university, or maybe they're going to do 2 years at a community college and then transfer over to a state university? Who knows? You've got to answer that question or at least have a rough idea of what you want the proceeds of your life insurance to go towards. For the sake of argument, let's just say that tuition plus books plus room and board and maybe some food meal money is around $20,000 a year for a 4-year public university. So 20 grand a year times 4 years is $80,000. If you have 2 kids, that's $160,000. Now, if your kids get a scholarship or if they work through school or if they do end up going maybe in the military or maybe they end up doing that 2-year community college and then transferring their credits over to a full university, if they end up doing something like that, then there will be some money left over for maybe a down payment on a house or maybe to help them get started with their investment portfolio. Who knows? But let's add all this up together now. We're at $328,000 before, plus another $160,000. I got my cheat sheet here. So we're at $488,000. The next thing that we have to think of is income replacement. So we're at $488,000. If there was no mortgage, if there were no car payments, no student loan payments, if there was no debt to speak of whatsoever, you had your fully funded emergency fund, all of your spouse's retirement dollars got transferred over into your retirement accounts, how much monthly income do you need to get by? Who knows? But let's just say, for the sake of this example, if you were completely debt-free, including your mortgage, that's another $2,000 a month. So that's $24,000 a year. We don't have to have this $2,000 income stream per month coming in for your entire life. Let's just say for another 15 years until the kids are older or grown and out of the house. So that will be another $360,000. So you add all this up together, it's around $848,000. Now, usually when we get to this part of this example, a client would tell me, okay, that sounds all right, but I'd like to see rates at $750,000, $850,000, and throw in a quote for $1 million as well. Now, if you were making around $85,000 a year between your salary plus all bonus income, then that's 10 times your income right there. And it might be exactly what we came up to in the personalized approach, but now there's a little bit more intentionality behind what the remaining spouse will do with the proceeds from this death benefit. I'm going to share some quotes for you here in a minute, just so you have a little bit of perspective between the difference of $750,000, $850,000, and $1 million of term life insurance. Because I think what you'll find is that if you are healthy and don't smoke, the difference between those three numbers really isn't all of that much. And then I also ran the same figures comparing a 20-year term life policy to a 30-year term life policy to help give you some perspective. Now, I'm blacking out all of the names of the insurance carriers because this isn't a sponsored video. Okay, all of these figures are for a 35-year-old male who is in great shape and does not smoke. A 20-year term, $750,000 policy is going to range between $28 and $30 a month. An $850,000 policy will range from $31 to $34 per month, and a $1 million policy will range from $34 to $36 a month. However, if you wanted to stretch this out to a 30-year term policy, then $750,000 would range from $51 to $53, an $850,000 30-year term would range from $57 to $60, and a $1 million 30-year term would range from $65 to $66 per month. As I mentioned before, this is a personal decision. Somebody might only need 20 years worth of coverage, but maybe due to family history or your personal beliefs, you might want a 30-year policy. If your budget can allow for it, maybe that's the route you go. It's totally up to you. Life insurance is just one component of financial planning, though. If you are serious about having a better understanding about your retirement and financial planning, check out my video called Am I Saving Enough? Or if you've got a little more time in your hands, check out my retirement planning playlist. If you have any questions for me, let me know in the comments below, and do me a favor and tap that like button. I appreciate your time. See you in the next one.